There's a lot of drama going around personally inside when you're thinking about selling your place and buying another property. Listen, there's a lot of people that have really low interest rates, and they're like, well, if I sell my place and buy another place at the same exact dollar amount, I'm going to be paying double the amount in mortgage. Now, everyone's situation is different, right? If your family is growing and you're living in a 2-bedroom condo, but you have yourself, your spouse, and 3 other kids, that is a problem. But the challenge is that, well, how do you leave that property and purchase another property either at the same time, or do you rent it? There's so many different options that come with that. So we're going to break down all of that in today's video. So we're going to just kick it off, kind of going right into it. So pros and cons of selling your property. Now, and there's also different ways that you can sell your property, right? You can use a realtor to sell your property. You can sell the property yourself. So there's going to be a cost associated with that sale, right? No matter almost how you look at it, because you still have to pay for closing costs on the sell side, and you're also going to be paying closing costs on the buy side when you purchase a property. So you need to figure out what that net is going to be to you based on what you owe and what the sale price of the property is going to be. Now, it kind of leads into, can you rent your current property? Now, it really depends on the financial impact that it has on the purchase of the property, and it depends on the type of loan product that you use, right? If you use a VA home loan to purchase a property and then you're going to be purchasing another property, you have to consider your VA home loan entitlement, how much is actually locked into the current property, which is going to be based on the original purchase price of the property. And the original loan amount that you took out. That's why you definitely need to get a certificate of eligibility. If you use a conventional loan or an FHA loan, there's also different parameters for that. For example, if you have an FHA loan and you're looking to purchase another property and it's also going to be an FHA loan, you're going to have to meet certain parameters to use that loan again. Now, if you used an FHA loan and now you're going to be using a VA loan, then it's not a big deal. You can still offset the entire mortgage payment on a departing residence without any reserves, as long as you're in a strong rental market. And basically, you can get a realtor to provide what's called a competitive market analysis. And that's going to catapult you into that piece with the lender to say, you know what, we can offset that. And you don't even have to rent out the property fully yet in order to offset that payment. Now, with other mortgage products, you do have to already rent that property, which creates a challenge because it's all about timing, right? If you're selling your property and you're thinking and you're going to be purchasing one, it's a limited inventory, or it's limited inventory pretty much everywhere. So it definitely gets a little bit tricky, but we do them all the time. So you really shouldn't be worried about it too much. The other challenge with renting a property for a lot of people is becoming a landlord, and they either don't have time for that, or this is not even time. It's a cost, right? If you hire a property management company, you still have to maintain that property. But the pro to that is that someone else is paying your mortgage and you're building that equity in the property. So let's say you have $200,000 left on your mortgage. You have 25 years left on the mortgage. Over that 25 years, that asset housing typically appreciates, and your mortgage balance is going down. So even when you go down to paying it off, you're sitting on a couple $100,000 in cash, or actually it's locked into the property. So until you sell it, then you're going to be able to realize those gains, and that's when you're going to be paying taxes on it. I'm not a CPA. Talk to an accountant, especially when you're doing all of this. All those things are going to be considered. And the one cool thing that you can do to offset your effective rate and the mortgage payment on your future purchase is using the money that you make off the rental income to offset the purchase of the property. So then it starts becoming a little bit more lucrative. You're like, well, if I sell my place, we need a bigger place, but I can make an extra $1,000 on my rental. Then I can use that money to pay for the mortgage. Now, $100,000 may seem high when I say it, but there's a lot of people that have really low rates, and the rental market has kind of exploded over the last couple of years because it is definitely much harder to get into home ownership. That way, it's a catalyst for you to be able to get that money. But again, it's going to depend on how much entitlement you have locked into your property and using, let's say, a VA home loan again. The way you can do that is request a certificate of eligibility. I'll drop a link down below in the description. You guys could schedule a call with us to get your certificate of eligibility, or you could just go to the va.gov and get that certificate yourself. Normally, it's pretty easy and it's pretty fast. And also, in with all of this is really understanding the market of where you are. Sometimes, reaching out to a professional like a realtor is going to help you determine that. But some people, right, you have the internet, you can search on any of the websites for rentals. There's plenty of them. You can use like the Zillows of the world, realtor.com. There's plenty of the website, apartments.com. There's all types of stuff that you can go and look at. And you also kind of think about what you want to do from that personal circumstance position, right? Do you want to deal with that headache of the renters? What happens if they don't pay rent? And again, depending on where you're at, you might have military clientele that are coming in. If you're in like in a military heavy area, you can also have someone assume your mortgage as well. So you can swap entitlement with somebody. We did a whole video on that because that in itself is going to take a while to explain, but it's definitely an option, especially if you have very little equity in your property. So let's say you bought 2 years ago, you may not have $100,000 in equity where you can sell the property, absorb the cost, and it makes sense, right? Other people's situation is where they have to sell it because either they're on active duty PCSing somewhere else, or they are, we often see it when someone passes away, a property is going to sell, like from a estate sale perspective, divorce situations, family size growing. Sometimes they just want to get rid of that property and purchase another one. And so if you have little equity and you have a VA home loan, then doing an assumption with somebody else is a great option, but basically lets you get out of that property for a very minimal cost, but you still have to pay closing costs. It's still a regular sale. So just note that, just like you did when you purchased your property. Now, all of this is going to revolve around your financial position. So the first thing you have to kind of do the considerations, but what's going to help you determine that is by getting a pre-approval from a lender to see what your financial picture looks like in order to buy that next property. Because you might be in a situation where you're like, you know what? Or the lender's going to let you know, hey, based on your financial picture, you're going to have to sell the other property in order to purchase another one. Well, that kind of eliminates that option. Or they'll tell you like, listen, you have a lot of flexibility. You can keep the current property. You can purchase another one. You could be purchasing a property next door to yourself. We've done that before. Or you could be purchasing a property across the country. And especially if you're overseas, own a property here, but you want to buy another one, another set of circumstances that are going to come up. It's kind of unlimited. I mean, I could talk about hours about this, but that's also going to help you dictate that pre-approval is going to dictate those loan options for you, because, you might be sitting in such a good state with your current property and renting it out that you might say, well, we have the cash to do a down payment with, let's say, an FHA loan or a conventional loan. Then it's going to also open that up to understand what those products look like and what are the pros and cons of those additional products that you might be able to do. Now, for some people, when you have a VA loan and you want to use your VA loan again, what's going to happen is that your entitlement is locked into the property you currently own. So you can sell and buy on the same day. So when you do your pre-approval for the VA home loan, they're going to basically pre-approve you for your full entitlement being contingent on the sale of your property. So that's why most of the time it goes pretty smooth, but there can be delays on either side that move that needle. And sometimes it's a domino effect where you have somebody buying, you're selling, you're buying someone else's place, they're buying another, they're selling their place to you, they're buying another one. So there can be unexpected delays and frustration around that, which can cause some issues for you when you're doing your move, especially like if you're moving across the country or from overseas. Because again, you're trying to line everything up so you can kind of get the best deals and costs for that. Another factor with loan products is debt to income ratios. And that's why sometimes what you're qualified for may be like, and your financial position will be, hey, you could only do the VA home loan. So now you're going to have to consider selling that property in order to buy another one, because most products have debt to income requirements where VA loans look at mostly residual, with DTI being a factor, but not as big as the residual income component for the VA home loan. The other thing is the credit considerations. If you have really good credit, then it kind of opens up more loan products as far as like being competitive on the pricing. Let's say private mortgage insurance, if you don't have a 20% down payment. And again, it might lead you back to doing a VA home loan. And again, this is why that's probably one of the first step and most important part of all of this, because it lays the foundation for what you're going to actually be able to do. Now, when you're going through this process, obviously choosing the right lender is critical to understand, or like a critical piece, because they're guiding your entire life here, right? When you're going through that process of making that decision, do you sell and buy? It's a life decision. It's a decision for your family. You want to be able to move for whatever reason, school districts, lifestyle, all of that is factored in. And unfortunately, a lot of lenders will pre-approve people, and they actually pre-approve them incorrectly. So you might be already selling your home under contract, on the buy, and then you can get denied. I'm not making that up. We get those calls all the time. So if you guys want to work with us, you can schedule a call with the link down below. If you're in the process of selling your place, you can submit a loan estimate. We can review it and see if we can beat it. That way you're getting the best pricing possible. Because if you work with the biggest lenders that are out there, I'll tell you this, that you're being overcharged 100%. We see it all the time, thanks to viewers like yourselves that submit these documents to us and want us to review them, so they save a couple $1,000s. A couple $1,000s is a lot of money, right? Moving is expensive. And then you really have to understand is to identify your housing needs, right? What is it that you actually want in a property? What do you need in a property? The size of the property, how much maintenance you want to be able to do, or you have the ability to do. Because sometimes people will go for townhomes and condos because it is a lot easier to maintain, because you're already paying an HOA fee that maintains the property for pretty much anything from the exterior, versus, hey, I'm buying a single family home. I got to do a lot more work to it. It doesn't fit my lifestyle. And also the pricing consideration. This is why you got to do a lot of market research ahead of time. Again, the internet is great because all those things are available to you to be able to research ahead of time, right? If you need a 4-bedroom, 3-bath, you could throw that in one of the online providers, and then you're going to be able to see, okay, hey, these price points are just too high for us. And the cool thing, like for me, when people ask me to price out things and how much things are cost on a monthly basis, I primarily use realtor.com because it lets you set a veteran profile. Just don't go with do not contact the people that they have market to you on there. They are one of the ones that overcharge you like crazy. Again, we get those estimates all the time. And then you can basically set those parameters for yourself, put in the interest rate after you've been pre-approved, so you're having a good idea of what the payment's going to be. I would always estimate a quarter higher on rate, because rates move all the time. And you don't want to be thinking like, well, this is my absolute budget. If I'm $1 over, it's not happening. Have some flexibility when looking at homes, because, you might be looking at properties that are fully rehabbed that cost a little bit more versus properties that need some work, but you have to put work into it. All of that is going to be a factor. And for some veterans as well, being close to a, let's say a VA hospital also is going to have a big impact on them. Because if you do have a lot of medical needs that you need, then having accessibility to a hospital or VA hospital is also going to be extremely important to you guys. Now, when it comes to executing on your plan of, well, how am I going to do all this, is going to be the groundwork. The first part's going to be understanding your pre-approval. What am I pre-approved for? How is the program going to work? Am I getting another VA loan? Am I doing a conventional loan? Am I doing an FHA loan? Do I have the proper information? The rates? Am I getting charged private mortgage insurance? What are the fees associated with that? That lender is going to let you know. These are your left and right limits for what you can purchase. Then you're going to sit down and look at your personal finances, your budget. You're going to look at it. You're going to go, this is what we're most comfortable with within a monthly budget. Our lender told us this is the max. That's too high. We want to be lower. Do your research on any of the websites that are out there. Like, I mean, again, I use realtor.com because they also have live MLS feeds. So when you're looking at properties, they're updated in real time. Again, that's another big benefit versus the other ones where they have delayed. Their systems are delayed, so you won't get. You might be looking at a place, you're like, I want to look at it, and then it's already contingent. It won't update. Typically, that updates the second day. Minus realtor.com, then it's all in real time, makes it easier. You got to make a determination after that to say, well, who am I going to be working with? What is my team? Just like in the military, working with the right team is going to make the world of difference, right? Having a lender that's very responsive, someone that's going to educate you on the information. They're going to educate you on how the system works, what the timeline looks like. So it's going to match what you want to be able to do. If you're working with a realtor, do they have your best interest? Are they going to be able to tell you when doing a home inspection that, you know what, there might be some issues with the appraisal? They'll be like, I know this because I work with a lot of VA loans. There's a lot of things you can do, like escrow holdbacks. I just did a whole video on that, on how you can do some of the repairs yourself to make your offer a bit stronger, right? And, and also you might think of just selling the property yourself. So you kind of really have to dive into that component, market research, making sure that you then have a separate team, right? You need to have your own attorney, depending on where you're at. Someone has to draft a contract for the sale. So you got to do some research in your area to make sure that you can do that. Plus, if you're doing it yourself, you have to do the showings yourself. You have to do all the negotiation. Not everyone's an expert at it. That's why you can work with additional professionals. So I know you covered a lot, and we'll do some separate videos to kind of separate each of these topics out to make it a little bit more digestible. But if you guys can, please hit the like and subscribe button so we can get more content out like this. And if you guys have video ideas, drop them in the section. And something I don't really talk about much is that we actually do a lot of presentations for military units and organizations around housing. So we're happy to do that. We can do them anywhere in the country with the beauty of doing conference calls. We typically spend like an hour and educate people on that. So if you're interested, you can also set up a consult for that. I'll catch you guys soon.